Imagine that you have a magic machine that can turn your money into more money. Every month, the machine sends you a check with a portion of the profits that it has made. You can use the check to buy whatever you want, or you can reinvest it into the machine to make even more money. The machine never breaks down, never runs out of power, and never stops working. Sounds too good to be true, right? Well, such a machine does exist, and it is called dividend investing. If you stay until the end, we have tips and tricks most people don't know or don't use. Let's define it first and then get into the good stuff. Dividend investing is the art of buying shares of companies that pay dividends. Dividends are payments that companies make to their shareholders from their earnings. Dividend investing can help you grow your wealth fast and live off dividends for life. But how does dividend investing work, and why is it so powerful? Let me explain. Dividend investing works by combining two sources of income, dividends and capital gains. Dividends are the income that you receive from owning dividend stocks. Capital gains are the increase in the value of your dividend stocks over time. Together, they form the total return of your dividend portfolio. Dividend investing is powerful because it harnesses the power of compounding. Compounding is the process of earning interest on your interest. When you reinvest your dividends, you buy more shares of dividend stocks. This increases your dividend income, which allows you to buy even more shares. This creates a snowball effect that grows your wealth exponentially over time. Dividend investing is also beneficial because it provides you with many advantages, such as steady income. Dividend stocks pay you regular income that you can use to cover your living expenses, save for your goals, or enjoy your hobbies. You don't have to worry about the ups and downs of the stock market as long as the dividends keep coming. You can also reinvest your dividends to grow your income faster. Lower taxes. Dividend stocks are taxed at a lower rate than other types of income, such as interest or capital gains. This means that you get to keep more of your money after paying taxes. Some dividend stocks may also qualify for special tax treatments, such as qualified dividends or dividend reinvestment plans, DRIPs. Higher returns. Dividend stocks can outperform the market average and generate higher returns than non-dividend paying stocks. This is because dividend stocks are usually from mature, profitable, and stable companies that have a competitive edge in their industries. These companies can grow their earnings and dividends over time, which boosts their stock prices and your portfolio value. Lower risk. Dividend stocks can reduce your risk and volatility in your portfolio. This is because dividend stocks are less affected by market fluctuations and economic downturns than non-dividend paying stocks. Dividend stocks can also provide you with a cushion of income that can help you weather any financial storms. But how do you get started with dividend investing? How do you find the best dividend stocks for your portfolio? How do you avoid the common mistakes and pitfalls that many dividend investors make? Don't worry, we have you covered. We have created a YouTube channel called Wealth Map, where we teach you everything you need to know about dividend investing. We show you how to find, analyze, and select the best dividend stocks for your portfolio. We also give you updates, news, and trends on the dividend market and the economy. Dividend investing can provide many benefits, such as income generation. Dividend stocks can provide you with a reliable source of income that can supplement your other sources of cash flow, such as salary, pension, or rental income. You can reinvest your dividends to buy more shares and compound your wealth over time. You can also use your dividends to pay for essential expenses, such as housing, food, or healthcare. Capital appreciation. Dividend stocks can also increase in value over time as the company grows its earnings and market share. This can boost your portfolio's total return and help you achieve your long-term financial goals. Some dividend stocks can even outperform the market average and generate higher returns than non-dividend paying stocks. Tax efficiency. Dividend stocks are generally taxed at a lower rate than capital gains or interest income. This means that you can keep more of your money after paying taxes. In addition, some dividend stocks may qualify for special tax treatments, such as qualified dividends or dividend reinvestment plans, DRIPs. Diversification. Dividend stocks can help you diversify your portfolio and reduce your exposure to market volatility. By investing in different sectors, industries, countries, and styles of dividend stocks, you can balance out the risk and reward of your investments. You can also benefit from the growth potential of emerging markets and new technologies. Here are some tips and tricks that will help you succeed in dividend investing. Do your research. Before buying any dividend stock, make sure that you understand its business model, financial performance, competitive advantage, growth prospects, dividend history, payout ratio, yield level, and future plans. You should also check the company's credit rating, debt level, cash flow situation, earnings quality, and valuation metrics. Look for quality. Quality is more important than quantity when it comes to dividend investing. You should look for companies that have a strong track record of profitability, stability, growth potential, competitive edge, loyal customer base, and ethical standards. You should also avoid companies that have excessive debt, low cash flow, poor earnings quality, or unsustainable payout ratios. Choose wisely. There is no one-size-fits-all formula for choosing the best dividend stocks for your portfolio. You should consider your risk tolerance, time horizon, investment objectives, and personal preferences when selecting the companies that suit your needs. You should also diversify across different sectors, industries, countries, and styles of dividend stocks to reduce your risk exposure. Be patient. Dividend investing is not a get-rich-quick scheme. It requires patience, discipline, and consistency to achieve long-term success. You should not chase after high dividend stocks or sell them prematurely based on short-term fluctuations or emotions. You should also reinvest your dividends regularly to take advantage of compounding effects and increase your wealth over time. Dividend investing is one of the most effective ways to grow your wealth fast and live off dividends. But it is not without challenges and risks. You need to be aware of the common mistakes and pitfalls that many investors make when investing in dividend stocks. Falling for dividend traps. Dividend traps are stocks that have very high dividend yields because their stock prices have fallen significantly due to poor performance, financial troubles, or negative news. These stocks may seem tempting to buy because they offer a large income stream, but they are also very risky and may cut or suspend their dividends in the future. You should avoid dividend traps by looking at the underlying fundamentals of the company, such as earnings, cash flow, debt, growth, and payout ratio. You should also monitor the dividend history and trends of the company and look for any signs of dividend cuts or reductions. Neglecting dividend growth. Dividend growth is the rate at which a company increases its dividend payments over time. Dividend growth is important because it reflects the company's confidence, profitability, and commitment to shareholders. Dividend growth can also help you beat inflation and increase your purchasing power over time. You should look for companies that have a consistent and sustainable dividend growth rate that is higher than the inflation rate and the industry average. You should also look for companies that have a dividend growth streak, which is the number of consecutive years that the company has increased its dividend payments. These are just some of the common mistakes and pitfalls that many investors make when investing in dividend stocks. By avoiding these errors and following the tips and tricks that we shared with you, you can grow your wealth fast and live off dividends. Start now. Try it out for yourself. See how dividend investing can transform your financial life. We have created a YouTube channel called Wealth Map, where we share our insights, experiences, and recommendations on dividend investing. We also show you how to find, analyze, and select the best dividend stocks for your portfolio. We also provide you with updates, news, and trends on the dividend market and the economy. If you want to build your wealth fast and live off dividends for life, dividend investing is the way to go. You can start with as little as $100 and grow it into a fortune over time. All you need is a brokerage account, a dividend stock screener, and a dividend growth strategy. And of course, you need to subscribe to our YouTube channel, Wealth Map, where we will guide you along the way. Dividend investing is not a get-rich-quick scheme, but a proven and reliable way to achieve financial freedom and independence. Join us today and discover the magic of dividend investing. You won't regret it. Click the subscribe button below and join Wealth Map today. You will be glad you did. And remember, the sooner you start dividend investing, the faster you will grow your wealth and live off dividends.